This is the May 2022 Las Vegas Real Estate Report. I'm Jan O'Brien. I'm going to be your host, walking you through what's going on in the real estate market here in the Las Vegas Valley. I'm a team leader along with my co-team leader, Cosmo Morabbi. This great group of local area experts and seasoned professionals. Make sure you reach out to anybody on our team to help you out with wherever you want to live in the Las Vegas Valley if you're thinking of buying or selling. All right, let's talk about what I'm going to cover today, which is always what is going on in the Las Vegas Valley. We're going to cover the whole valley, do a comparison of 4 areas, and just give you an idea of what the median sales prices are. Talk about a couple key national trends and what is going to happen with home price appreciation as we move forward and the market in general. Well, here's the theme that we've seen developing, and I've added something this month. Here's a snapshot of the valley, the whole Las Vegas Valley for the month of April, but we track it every month. We actually track the stats weekly as well. And I just wanted to point out from a bigger picture, we're 4 months in now, what's going on, and there's 2 themes. Prices continue to increase every month. We're setting new records. However, we're starting to see signs of more available inventory and a little slowdown on overall sales. So let's look at this chart right here. Here's where we kicked off the year for single family homes, 435,000. It's been climbing every month to now we're at 475,000 for the month of April. I'll dive deeper into condos and look at the comparison year over year in just a moment. And the other area I want to point out here is the available inventory. This really is starting to tell a story. This means how many listings were still on the market the last day of the reporting period. So we had 1821 in January. We're up to 2441 last month. But we also like to look at the listings to see, well, is there less available because there were less listings? Well, the listings were 2950, 3526, 3667. So this simply means properties are coming on the market, but less are going into pending status. Now the sales kind of show some steady sales here, but remember the sold column here is reporting properties that closed, which mean they sold 30 to 60 days prior. Okay. So that is really telling the story, and we'll watch this every month to see. So let's look at the median sales prices. 475,000 is a median sales price, new record for single family homes. So is the 275 for condos. That's up 35.8% year over year and about 26.7% precisely over 2021 numbers. And so here they are for 2022. And here's where they compare, right? So that's like $100,000 in equity, in an equity gain, price increase for single family homes year over year. It gives you a good picture of it right there. The number of new listings. So here we are back in tracking back a rolling 12, if you will. And December started out, usually it's lower in December anyway. We usually see a peak in January of new listings. And as I just mentioned, kind of steady for a couple months here. And then it popped up in March, and we're a little higher in April about new properties coming onto the market. Some other key stats: cash continues to move up. 32% of all homes sold in April were for cash. That's up almost 28% year over year. This is definitely investors that are in the market, but there are a lot of folks that are buying cash, that are moving from other areas and buying cash. More on short sales in just a moment, but definitely continue to be a very small percentage of all sales for the month. Now, here's that comparison of the different areas of town. So Pahrump, about an hour out from Vegas. Let's start with that. So we just said 475,000 was the median sales price for all of the reporting area for the multiple listing service for the Las Vegas area. So 475 compared to 395, that's up 17.7% year over year appreciation. And Pahrump was 74 units that sold in April. All right. We also see signs of the listings. 20% more listings were on the market as well. Moving over to Summerlin, we're going to take a trip around the valley here. So Summerlin, we're reporting in all of the Summerlin areas, the west, the older part of Summerlin, the new part of South Summerlin, and in the west part. So the median sales price, $722,500. That's up 24% year over year. 242 new listings. The units sold was down. So this is where we're seeing, again, as I mentioned, I personally feel there's a lot of folks that are considered may want to sell their home. It's not normal, right? We're not in normal times. If you are in a home and you've got $200,000, $300,000, $400,000 in equity, and you are sitting on a 3% interest rate, and you don't have to move, why would you? And that's what we continue to hear. And that definitely adds to the issue that we're having with prices continuing to go up because demand is still there. But hopefully, as we go, and we frankly feel it's going to be like this till the end of the year. Now let's go over here to Silverado, or Inspirada here. Inspirada is in the South Valley. The median sales price 604. This is a smaller data set because we're just looking at the master plan compared to all of Summerlin and all of Pahrump. But 28 homes were sold in Inspirada in April, which was down just a little bit compared to the previous year. And the median sales price was up about 10% year over year. However, 42 new listings came on the market in the month of April. So 605 compared to 475. And that brings us over to Silverado Ranch. We're using the boundaries of the freeways to report on this Silverado Ranch area. Median sales price of $495 with 164 units sold. Let's turn to the national housing and look at a couple key stats and trends. The first thing I want to talk about is headlines sometimes are just bent to, create drama, right? So you may be seeing all these things or other people on YouTube talking about the housing crisis is coming and or recession's coming. And it's very possible that we're either in a recession or we're moving towards one. We definitely know, we all personally know inflation is skyrocketed with what we're paying for things at the grocery store to the gas pump. But recession doesn't necessarily mean a housing crisis. And here's the data to point that out. Here are the last 6 recessions, okay? Had a little recession in 2020. Homes continue to appreciate at 6%. Here's where everybody has the memory. I know I have that memory. I was living here in Las Vegas and actually had to write courses on how to handle short sales and foreclosures because we'd never been in a market like that. That was different. We are not in the same market that we were back in this 2006 to 2008. People were upside down in their homes. The values went down. There were so many homes on the market. That's the opposite of what's happening now. People have equity. There's a lot of demand. You're going to see here that in a moment, I'm going to show you what all the experts are projecting, and it's nothing but continued appreciation into the future. So 2001, it was up. It was slightly down in 91, even in 81 and 1980. So recession doesn't necessarily mean housing crisis. So let's turn to foreclosures. This is another thing I hear all the time. I'm going to wait till all these foreclosures come on the market, or I'm going to wait till all the prices come down before I jump into the market. Well, you're probably going to be waiting a while because here's the data on short sales and foreclosures, and 4 reasons why we just aren't really going to see the numbers. Okay, so up here, let's start with fewer homes are in trouble. So this is a chart showing since the beginning, 2020, all the way through 2021, how many people in the country that had mortgages were in a forbearance, basically not making their payment or making some adjustment to their payment. It went from 4.75 million down to 690,000 or so are in some type of forbearance or loan workout with their lender. And the lenders aren't going to immediately, even though all that forbearance is lifted, it takes a while to process all of this and give people an option and a chance to make it right. Okay, so fewer homeowners in trouble. And number 2, they have equity. I've just gone through that. Most people have equity. Unless they've pulled the equity out through a refi, or maybe they bought recently and their house hasn't appreciated as much, or they didn't have a lot of down payment. There's a lot of factors there. There are fewer overall foreclosure filings. So this just shows you from 2017, the average number of foreclosure filings. So last year, obviously this is lower because the banks couldn't start foreclosure because of the forbearance, the mortgage forbearance. So even if it starts to continue to tick up, which we are seeing more, it's the last one. The market can absorb new listings. People are going to be foreclosed on. It historically, it happens all the time, right? It's just not going to be at the great numbers that everyone thinks it's going to be. In my opinion, it's just not. And if it does, if all of a sudden we have a ton more properties in the next year or year after come on the market, at the moment now, if we continue to have this demand or maybe a cool off of the market can generally absorb the new listings that come to the market, right? So it brings us to where do the experts, okay, the average of all the forecasts. This is Fannie and Freddie and CoreLogic and National Association of Realtors and all the key people out there that track all the data, a lot more detailed than me, a lot more qualified than me. I'm just here working this market for 30 years and giving you my 2 cents on it, okay? Everyone blended here for 2022 says we're going to have at least 9% nationally. Now, here in the Vegas area, we're going to blow that away. It's going to be, again, 20% again, probably, where I've just been reporting month over month, 24 to 25 or more percent appreciation for the whole valley. Unless something drastic happens, it's not going to go back down to 9%. It's probably going to be somewhere in that 15 to 25%. So that is the reality of what's happening. We're going to watch this every month to see what we continue to have, what other indicators that are happening nationally, what's happening in the world, what's happening that's going to impact mortgage rates and so forth, our local market. All we know for now is there is still a ton of demand. There are properties coming on the market, a little bit more than that are staying on the market, which means there's definitely some more opportunities for buyers. And if anything, what happens with these prices, I really think that the prices will slow down. We're calling it a deceleration of how much they are appreciating month over month. Well, so far this year, we haven't seen that. I just showed you that chart where we went from 435 to 475 in a 4-month time frame. We'll only know when we get there, right? So that's it for this month. Make sure you reach out to any of our local area experts to help you with all your real estate needs. And you can follow us at Living Las Vegas and Henderson on YouTube, TikTok, Instagram, and Facebook. We'll see you next month.